Hello and welcome to this Friday's edition of Murphy's Market Minute with Elliot Omenson.
And Nathaniel Vossman.
Bring in the wild and volatile last, really it's been a couple weeks of volatility to you. Let's start with the bad, the dirty, the ugly, right? Consumer sentiment, I think, has reached a low that it hasn't seen in quite a while.
Yeah, it's been, I think, a couple of years. June 2022. So it's a little while.
Yeah. It's been a while since it's been down this much. What do you think are the main factors driving that?
I think
is it because the Chiefs are 5-5?
Yeah, maybe around here. No, I think it's the continued sentiment around uncertainty around inflation, and then also some of the rising prices in homes, and then also just the weaker than expected, I guess, slower job growth this year than previous years.
Yeah. Didn't unemployment tick up from 4.3 to 4.4?
Yeah, but jobs added would beat expectations, though.
Yeah, by like over 2 times the amount, right?
Yeah.
But then they revised the previous month down.
Yeah.
And so it is just kind of interesting how a lot of times what we think is a good thing has the opposite effect on the market, right?
Yeah, because in this case, looking at a December rate cut, we're kind of like, right in the middle of an important time with like the Fed choosing interest rates, and they dropped pretty significantly on this jobs report because of the jobs gain beating expectations. Initial jobless claims came in stronger than expected, but then they did the exact opposite today, because the New York Fed president was talking about how he expects
John Williams.
Yeah, he expects, he didn't say when, but, shorter term rate cuts like sometime soon. And
they have the odds at a rate cut at 70% after his comments, according to futures contract.
Yeah, I think it's even higher now. And that's like a 30% bump.
Yeah. They're really stuck trying to balance between inflation and jobs. I think this article says inflation's still at rank around 3%, and they really want to get it down to 2%, but they're trying to balance that between with the job market as well. So he said, my assessment is that downside risk to employment have increased as the labor market has cooled, while the upside risk to inflation have lessened somewhat. Underlying inflation continues to trend downward, absent any evidence of second-round effects emanating from tariffs. So we'll see, obviously, what happens there. So the market shed quite a bit over the last couple of weeks, right?
Yeah, it's down several percent from its highs. It was ticking up there, starting to get close to 7,000 for a while, S&P.
Yeah, now it's at like 65.87, I think.
Yeah, sounds about right.
Right. Still up 12. S&P 500 still up 12% for the year. The Dow is still up 8.5 for the year. And the Nasdaq, which was actually one of the 3 primary indexes that was started off this morning, still down, turned around, and it's still up almost 15% for the year. And so I always try to stress to people, that when you look at your investment accounts, the bottoms aren't real and the tops aren't real, right? And you want to just draw a line from one point in time in the back and just draw it straight across to wherever you're at, and it's going to eliminate the downs and the ups. And that's closer to reality unless you're taking it all the way out to a high. You got to know that high is going to come down at times. But again, what I think is really cool is just the timing of things, right? We had a number of clients take advantage of the 8% account at Stairway and pull anywhere from 100,000 to 800,000 off the highs of the market and put it over into an account that's getting a guaranteed 8% right before all this happened. Yeah. That's pretty fantastic.
Yeah, pretty good timing there.
Yeah. Now, for the most part, these things don't really impact you too much. The point of the 8% account is to actually allow it to impact you even less. Because if you have that account that's not impacted by the market and that's where you're getting your income from, that gives you the time to kind of...
Yeah, it's a good place to draw down money when markets are bad.
Yeah. And then when the market starts to go back up, you just replenish that account and continue on like nothing ever happened.
Yep.
So it's pretty spectacular in that regard. Anything going on with? I mean, tariffs haven't really been too much in the news last couple weeks.
No big updates.
No, it's mostly just like fears of an AI bubble, right? Kind of driving the tech pullback.
Yeah. Nvidia did beat earnings.
Yeah, that was what was wild. Is Nvidia is crushing it, and their stock still dropped.
Yeah, the whole market flipped it around yesterday after that. So
yeah,
because of jobs report. So
well, and I think too at the end of the year, right? You usually have a lot of people selling stuff off. They got tax bills they got to pay. It's the end of the year. I think there's usually a lot of volatility at the end of the year, if my memory serves me correct, which who knows. But it's just how it seems to me to be. I know August is usually wonky because all the brokers go on vacation. And then the end of the year seems to everybody takes a bunch of money off the table. Wages climbed up 0.2% month.
Yeah, month over month.
Month over month.
3.8 year over year.
Yeah, I mean, it's barely outpacing inflation, but it's outpacing inflation.
Yeah, I guess better than nothing.
Better than nothing. What else? What else? Anything?
I think that's all the big stuff.
Yeah. So, I mean, personally, I don't see anything in the last couple of weeks yet to really give us too much cause for concern. If you're heavily into Bitcoin, your butt's probably pretty sore right now.
Yeah, mine is.
We went from 122, 123?
Yeah, just like a month ago.
Down to 82?
Yeah, it's dropped
30-something percent, 40%?
Well, yeah, like 40,000. So
I think it's 30%. It's well into the bear market.
Yeah. So
same with Ether.
Yeah.
I don't think this affects too many clients, but it definitely affects a handful. We're this close to rolling out estate planning for everybody. Anybody that doesn't have a trust, will, powers of attorney, all that stuff, you're going to get a portal, and we're going to build it all out to you free of charge. So that'll be cool.
Yeah.
A few people are starting to come on board using our new investment retirement portfolio management platform. You can download an app on your phone. We have all the accounts that we managed getting linked into that. You'll be able to link in everything else that you have, and you'll be able to see your retirement plan all in real time. So that's pretty cool.
Definitely.
It'll be a slow process for us to roll it out. There's a lot of work on our end. But if that feels like something you would use, feel free to hit us up. We'll get you into the schedule. Anything else?
I guess Google reviews.
Oh, and if you think you're going to have a big tax bill this year, get on the schedule. We got a lot of work to do. And we have a really cool program to mitigate those taxes. So, but I think that's it for everything for today.
Yeah,
So
I think so.
until next week, this is Elliot.
Nathaniel.
Signing off. See you guys.